Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video, we're going to be doing a brief stock analysis on Leggett and Platt stock, ticker symbol LEG. And this stock is actually one of the biggest positions in my portfolio, so I'm really excited to share this info with you today. So first of all, we're going to take a quick look at this little fact sheet about Leggett and Platt. They show kind of some of their products that they're involved in making, and then they give this little description. They say Leggett and Platt is a diversified manufacturer that conceives, designs, and produces a broad variety of engineered components and products for customers worldwide. The company has been headquartered in Carthage, Missouri since its founding 138 years ago in 1883. And then they show some other products here that they're involved in. They give some financial stuff, but the thing I think is interesting is to look at this. They show their markets and they kind of break down their sales based on what industries they're in. So they are the leading US-based manufacturer of bedding components, automotive seat support and lumbar systems, specialty bedding foam and private label finished mattresses, components for home furniture and work furniture, flooring underlayment, adjustable beds, and the bedding industry machinery. And then they break down their revenues here. So basically 48% of their revenues come from bedding, 18% from automotive, 17% from flooring and textiles, 8% from home furniture, 5% from work furniture, and then 2% from hydraulic cylinders and aerospace each. So right now we're just going to look at the balance sheet. So this is from the most recent 10Q report, which is the quarterly report they release. So these numbers are as of March 31st of 2021, and this was released sometime in May, I believe. So they list their current assets, which right now are right around $1.789 billion, which is a little bit higher than last year. So that's good to see, obviously, or that's a little bit higher than December 31st of 2020. So that was just 3 months prior. And then they show these, current liabilities right down here of $995 billion, which is lower than at the end of 2020, which is also good to see. And it's good to see as well that those current liabilities are about twice or half as small, that is, of the current assets. So the current assets are about twice as big, which is super healthy to see for the balance sheet as that is concerned. And then just looking at some of the, financial numbers like revenue here, they list their sales as about $1.15 billion for the first quarter of 2021 compared to about 1.05 for the first quarter last year. And honestly, I expected these numbers to be a lot bigger. Once I looked at these numbers quickly, I looked up the market cap, and their market cap currently is only around $7 billion. So I definitely thought Leggett and Platt was a lot bigger company. I would have guessed maybe around like $30 billion market cap, to be honest. So sometimes it's just interesting to see, because I would say Leg is pretty popular among a lot of dividend investors. So maybe that's just a small area of people that flock to it, but that's interesting to see. And we got off on a bit of a tangent, but the gross profit there is around $247 million. And then they list all their expenses here, and their net earnings come out around $87 million. And that is a earnings per share of 64 cents per share. And then they also list down here, some other expenses here to give their net income of $75 million for the quarter, which is definitely better than the $26 million loss they took last year in 2020. And then this PowerPoint slide here is from the first quarter conference call and presentation. And they kind of talk about a little bit of the same things that I just showed, but they kind of explain it. So their sales increased 10% this quarter, up to $1.15 billion, which I showed. And then they kind of go into the detail of why those changes occurred. So they said volume of sales was up 4%. So they basically sold 4% more products, but also they raised prices on average about 5% because of raw material related price increases. And then currency benefit also added 2%. And then divestitures reduced sales by 1%. So that leaves a 10% gain there on those sales. And then they say they had a record earnings before interest and tax of $128 million, which was up $37 million from last year. And their margin on that EBIT was 11.1%, which is up a staggering 240 basis points, which is, I would say, pretty significant versus the margin of 8.7% last year. They go over the EPS again of 64 cents, which is compared to 40 cents of Q1 2020. And obviously, Q1 2020 is probably expected to not be a great quarter. So we would expect those numbers to be significantly higher, most likely, than in Q1 of 2020. But I think it is important to realize that, they have rebounded, and that is good to see, and that is healthy. And I would say some companies really haven't completely rebounded, and I would say this shows that Leg sort of has. And then they talk about their fixed cost savings around $20 million. So essentially that's going to go forward into the future, probably every single quarter or year. And they also talk about their methodology for valuing their inventory of steel. So they changed it from a last in, first out basis to first in, first out, which is effective this year. And they're just kind of retrospectively adjusting that for the previous periods, which is interesting to see. I would like to see why they did that, but and how that could possibly affect the numbers that they are reporting. And they also increased their 2021 guidance of sales of $4.8 to $5 billion and EPS of $2.55 to $2.75. So that is pretty cool that they increased that guidance. So currently the dividend yield right here is around 3.2% for Leggett and Platt, with a payout ratio of around 61%. And they mentioned somewhere, I read, that they were targeting a payout ratio of around 50%. So this dividend growth rate of 4.5%, it's probably not going to increase that much from where it is right now in the next few years, unless they're able to grow their earnings a lot, because they would not be able to grow their dividend much if they want to keep that payout ratio around 50%. So also Seeking Alpha says 28 years of dividend growth, but I'm pretty sure they're actually either a dividend king now or really close to that, because my spreadsheet that I had 47 years in for them. That's just a number I entered manually, and that was probably at least a year ago that I entered that. So I think that would be at 48 now. But the two other websites that I found just with a quick Google search, dividend.com here says that they have raised the dividend for 50 years consecutively. And then over here, MarketBeat also says the company has grown its dividend for the last 50 consecutive years. So I would say at this point that I believe they're a dividend king. I haven't seen them on an official dividend kings list, and I read somewhere on the Leggett and Platt website it said they were a dividend aristocrat, so maybe they just haven't updated that yet. But regardless, they have been increasing their dividend for a long time. And as we can see here, just in the dividend history, their most recent dividend was actually a dividend increase of about 5%, so that's awesome to see. And just checking out their valuation a little bit, looking at the average PE over the last 10-15 years. In 2008 they're around 7, and then looks like they had negative earnings for a few years, and then through the 2010s they were around 12, 13, 14, and then this was probably just an anomaly here, so we're going to ignore that. And then through the late 2010s they were 15, 16, 17, 18, 19, which generally the range, and right now they're trading at 24. So definitely a little bit more overvalued than historically, but I'm pretty sure we could say that for the vast majority of stocks right now. So that's just one thing to consider. We can also consider comparing it to their sector. So they're in the consumer discretionary or consumer cyclical sector, whichever term you like to use, and I believe they're generally listed in this furnitures, fixtures, and appliances sector. So looking down here, we can see the average for the entire sector is around 22.65, which they're a little bit above, and then the average for the furnishings, furniture, fixtures, and appliances industry is 21.84, so they're a little bit above that as well. So right now I would probably say Leggett and Platt is a little bit overvalued, but that's just my opinion, and my opinion only, so figure it out for yourself. And just looking at that portfolio here, we can see that I own about 1.84 shares of Leggett and Platt, and this is an equity of about $95.81. So we're getting pretty close to that $100 mark. I think it probably had passed over that $100 mark at some point, but just because the market, corrected, I wouldn't say corrected, but a week ago was a pretty red week for a lot of stocks, so it was down a little bit. And they pay an annual dividend of $1.68 like we looked at, and they had that recent 5% increase. I think I covered that in my last dividend update video, and they pay me an annual dividend of $3.10. And because of my fairly good average cost, my yield on cost for Leggett and Platt is right around 3.78%, which I would say is pretty good considering when you're nearing a 4% yield. That is considered really good in my opinion, at least. And then looking at Leggett and Platt right here in my little, performance, basically my average cost I believe is $44.49 compared to the current cost of $51.96. And this is basically saying I've spent $82 on the shares that I currently own, and those are worth about $95, which is giving me a return of $7.47 per share, which is 16.78%, and that's a total return of $13.7 just on capital appreciation alone. This isn't counting the dividends at all. So let me know if you guys do own Leg stock and what you think of it. I think it's just, kind of a boring company. They don't do anything, super cutting edge or, trending, but everyone's going to use their products, and they're going to continue making sales and continue paying dividends, and slowly increasing those dividends. I would definitely like to see that dividend growth rate a little bit higher, but that's okay, and I'll just keep my position where it's at for now. So if you guys do want to check out another video on a consumer staple stock, I did a video on Procter & Gamble, and I'll actually leave a link to that right up here if you do want to check that out. And I just want to say thank you for watching this video. I really do appreciate that, and I will see you guys in the next one.